welcome to Build the Future Academy. Today we are going to continue with our chain. Last time we ended here in information A, where we were discussing 1.1. So today we are going to continue with information B. And again here we are given the director's fees. I said last time this director's fees is taken from the trial balance. It's from the trial balance. So this information you're going to get it from the trial balance. Alright, this amount is the amount that was paid to the director's fees for this year. Let us read the information so that you can find what is going to happen, or how are we going to calculate our director's fees that will appear in our income statement as an expense. The information says the company has two directors, meaning the company has two directors. Here is our two directors. These are our two directors. Alright, then it's saying each director receives the same monthly remuneration, meaning they are getting the same salary each and every month. One of the director or directors did not receive his director's fees for 1 month. So meaning, since we have two directors, one of the director received all full months of his director's fees, and the other one didn't receive for only 1 month. According to the accounting period that is used by the businesses, we are operating in a 12-month period. So if the director did not get the director's fee for only 1 month, meaning the director has received only 11 months instead of 12 months, meaning this director is short of 1 month. So if the director is short, or the expense or income is short in the income statement, but the director, let's say, since we are talking about the expense, the director has rendered the service to the business, so in this case the business owes the director, so this will be an accrued expense to the business. So we need to calculate this amount and add back to the income statement, part of the expense of the business. Alright, so the procedure will be the same. We are going to add up these two months, 12 plus 11. So this one will give us 23 months, if I'm not mistaken. We're going to have 23 months. So again, we are going to take the total that was paid to the directors. The total that was paid, it was 736,000, and then we're going to divide by the total months. We are going to divide by the total months. Total months is 23 months. This information will give us, or this calculation will give us, the director's fees per month. We're going to say 736,000 and divide by 23. So meaning each month the company or the business was paying 32,000 rand. So now, since we know that each month we are paying 32,000 rand, it means that the company is supposed to add, because we are only left with only 1 month, so the company is supposed to add this amount for only 1 month, so that you can have our total expense for this financial year. So if we were preparing the income statement, we are going to say director's fees, you can write it in full, director's fees, and then you open bracket, you take this amount from the trial balance of director's fees, 736,000, and then after that you are going to add, because we're short of only 1 month, we are going to add 32,000 rand. And then after that you can calculate the total expense for the director's fees that was supposed to appear in our income statement. You are going to add up 736,000, and then you add 32,000 rand, and then it's going to give us the correct total expense for the director's fees, 768,000. This is the correct total expense for director's fees that was supposed to be paid to the directors for this financial year. Thank you so much for watching. We are going to continue in the next tutorial to 1.2 for bad debt. So continue enjoying this video. If you have comment, you can comment. If you need us to develop something, we can develop something. Thank you so much for watching. Keep on watching this video. You're going to gain more knowledge in accounting.